Hey traders, welcome to another episode of Charts and Coffee as we move into the daylight savings lighting that I get this time of morning now. Hope everyone had a great weekend. Happy Monday, everybody. As always, let's get to it. We've got a lot going on, by the way, today. So if you're joining for Charts and Coffee here today, we're starting something cool in the Simpler Futures room, where on Mondays, and I'll be on every other Monday, on Mondays, we're going to continue streaming, not through this show, but another link. You'll see that on the Simpler Trading YouTube channel. We'll be streaming the morning, Simpler Futures morning of day trading and everything else that I cover. We'll talk about some macro, economic calendar setups, volatility, and the way that I day trade. So if you've ever wanted to sit in on the Simpler Futures room for the morning sessions, and that's the prime time for me of day trading, those first 2 hours of the day. That'll be happening immediately following Charts and Coffee, but a separate link you will find on the Simpler Trading YouTube page. All right, so with that being said, let's just jump on into it. Got a question to kick this off right here with Vish. Hey there, Vish. Good morning. LYV, sure. Let's jump on over there. LYV. So what have we got here? LYV and QRVO. All right, LYV, I mean, Live Nation. So I was just on YouTube watching, I'll use YouTube for music. I have YouTube Music. And I started noticing that under the music videos that I watch sometimes or listen to, now they're starting to show concert dates. And that makes me think of your Live Nation question. People are going back on tour. That's got to be great for Live Nation. And it's hard to bet against. You know, this is a reopening stock, right? At the end of the day, LYV is a reopening stock, and pullback buys into a reopening stock. You're going to be very tethered to the vaccination narrative. Yeah, it's a good looking chart. Double green, positive MACD. We pulled off the highs on the V score. Yeah, what's not to like about that? But definitely a reopening narrative. And, the more I start seeing those tour dates below those YouTube music videos, we're going to see, I think, stocks like that benefit. All right, this one, I would say no. I'm not saying that it's not a potential move to the upside. It will be an oversold buy. But this is where you want to take a look at a VWAP. This is where you might want to take a look at an oversold level, a Darvis level, a So Stochastic, Ready Aim Fire. So yes, I would still want to be bullish here, but it's not that nice trend, right? Chop is its own animal. So out of the two, I definitely say LYV. Thanks for the question. All right, next up. Hey there, Stephen. Is there an ETF for ZS? Yes. So the question is there an ETF for soybean futures? Yes, there sure is. Now, depending on what you want to do with it, you might want to check the liquidity, because usually when I direct people over to SOYB, what I'm doing is directing them to, as you can see here, the soybean fund. It's the soybean trust, just like you'd have the crude oil and the gas and natural gas and gold, silver, just another ETF for a commodity. And, you got to love that a little bit. Gives people who wouldn't normally trade futures via futures contracts. Now, I do want to encourage folks. And again, I'm not giving any tax advice. I'm not giving any, but two things about futures that are really important. They are taxed differently than stocks, especially for short-term gains. Check for your situation, check with your preparer, all that stuff. I'm not giving any advice here, but I'm just telling you that generally speaking, they're taxed differently, more beneficial for short term. And the other thing is there's no pattern day trading rule. So when you join me in the morning, one of the things you'll notice is that we can be in and out however many times we want, long, short. When there was an uptick rule, futures didn't have that kind of stuff. So there are some advantages. Of course, there's advantages both ways, but there are some neat advantages. So I will usually try to play the commodity futures when and all possible. There are options on the ZS, just as there will be on SOYB, but you'll see in some situations there are more options. Like, for example, GC and GLD. You're actually better off looking at options on the GLD if you're looking for the liquidity and a little bit more flexibility in terms of the expiry. However, GC, that's the futures contract, that's the main market that entire narrative is tethered to. So keep that in mind, but it's SOYB. And I am bullish on SOYB. In fact, that's a setup that we've been talking about both in my Sector Secrets Mastery as well as the Futures Room, where we do a lot of these swing type trades as well. So thanks for the question. Hey there, Jonathan. Am I short anything to hedge all my long positions? I don't hedge. No, I don't hedge. I do not hedge. So the question is, I'm not sure why I'm not looking for downside setups right now, because the upside is more profitable, because preparing for downside unless there's a setup. So Jonathan, I don't want to get into the bigger hedge conversation because it gets us down a rabbit hole, but just suffice to say, here's really good advice for that. Do you have a short setup? Because randomly hedging because the market's too high would have crushed you. Overall, if you looked at every single spot that the market was too high, overbought, remember that in an uptrend, the market's always going to look perpetually in a state of looking overbought, especially on oscillators. So what I recommend is, are there shorts that you are looking for? Do you have a short setup? Maybe it's a pattern, maybe it's a reading on an indicator, whatever it is. Maybe you're looking at the skew. I don't know. But whatever your short setup is, whenever your setups are reading that there's a chance for a pullback, hedge. I don't hedge. I find it typically to be very costly, both time consuming and money wise. So let me ask you the same thing. If you feel the markets are on their tippy toes, and I hear you, I mean, I totally do. But if you feel the markets are on their tippy toes, back off your position sizing. Be more conservative on your trend following entries. This market is moving. If you step back and look at the equities markets, this market is moving higher. And while hedges will have their time in the sun every now and then, the number of hedges that are typically put on, you're maybe going to break even on your cost and time. So I don't find it to be something that makes sense for the way that I trade. If I feel a market is overextended by my tools, I'll back off in position sizing. I will look at more conservative levels, and I'll continue to focus on relative outperformance. So it's a preference, right? And I don't hedge. I think it's a lot of you have heard me say I don't believe it to be a very productive way to be a trader. Now, longer term portfolios may be a different conversation, okay? But I appreciate the question, and everyone's got their own approach to that. There's no one size fits all for that. For every person that I know is a great hedger, they're happy with it. I don't hedge, and I have no problem with that either. So to me, the ultimate hedge is a stop loss. When I'm wrong, I get out, regroup, and give it a whirl again. So thanks. Paul, how are you doing, Paul? What do you think about Oracle? Gosh, Paul, I got asked about Oracle last week too. I know it's a relative outperformer right now. Pull back after earnings. Totally get that. That was a long position. This was actually probably our best tech long position for a while, but it's been a rocky one, right? I want to avoid tech right now. Kind of going back to Jonathan's question. Rather than hedging, I want to make sure I'm focusing on relative outperformers, and that's not tech. There are going to be exceptions to what's happening in tech. Yeah, of course. But I'd rather focus on strong stocks in strong sectors or strong, niches. So that is going to still lead me over to transports, industrials, energies, finance, maybe some healthcare. So right now I'm pretty content leaving tech to its crazy train. It's been nuts. I don't even like trading the NASDAQ as a day trading 1 minute time frame that much right now. So I would say for me, I'm going to leave tech alone, even something that looks like what could be a relative outperformer. But if you want to put some skin in the game, go for it. I don't think there's anything wrong with it. Your risk is going to be to about 64.5, 64.70. You could probably keep this pretty low risk, which is kind of nice. All right, moving on then. Hey there, Marty. Good morning. Bad news keeps coming about Brazilian COVID. Do I think EWZ puts on a pullback? So EWZ in Brazil, number one, Brazil's been in a double red. So this isn't, to your point, this isn't something new. This news has been continuing to hit the EWZ. However, there's another narrative that's going to benefit Brazil, but I don't know which is going to win. It's a tug of war right now. And you don't want to be in tug of war stocks. You don't want to be in tug of war sectors. You don't need to be in tug of war countries when you've got other countries that are relatively speaking outperforming. However, keep this in mind with Brazil. There's a commodity softs narrative. Commodities are in a reflationary uptrend. Brazil, think coffee, Soybeans, I believe they're the second or third largest producer of soybeans. Nowhere near the scale of the US, but I think they're the second largest producer of soybeans. So coffee, cocoa, sugar, beans. There are a number of commodities coming out of Brazil. That could be something worth watching. I don't see a great setup here yet. That's my issue. Would I mind being long Brazil? I actually would not. Probably, having seen the way it's bounced off right here, the -2 standard deviation, that might be something to keep an eye on. If we're choppy, a little bit choppy here, although it's double red, be patient, be patient. See if you can find another country. But I think the commodities narrative could, if it's going to pull out of this downtrend, I think it's going to be led by the commodities trading. All right, JD says, yeah, so we're going to do that every Monday, and you'll have, I'll be doing it every other Monday, so you can catch some of the other traders in the futures room, 9:20 on Mondays. I don't know how long we're going to be doing it for. It's something we're trying out. So yeah, for sure, give us your feedback, and it should be pretty fun. All right, moving on to, hey there, Steven. How does MRO look to me? Like a nice uptrend. Marathon Oil. What's not to like about anything tethered to the reflation narrative? Strong crude oil, king of commodities. There's not a commodity that doesn't require crude either to be grown, planted, harvested, transported, stored. Crude's at every inch of the way. So king of commodities, reflationary market, macroeconomically sound, stock tethered to that narrative. Gotta love it. Gotta love it. So yeah, for sure. On a pullback though, energies have been in fuego since last year, but good eye, nice trend. What do I think about the NQ today? Marty Jean, that I probably have 3 other indices that I'd much rather be trading. Frankly, that's what I think of NAS. NAS is, for as far as I'm concerned, the one place that has to have a perfect textbook entry. And even then, for example, last week, you saw how Tencent just sent the NAS tumbling. I really don't want anything to do with the NAS right now. Much better structure on the Dow, much better structure on the ES. And normally, I'm not a big Russell trading fan, but it's been a little bit better too. But Russell is probably my second least favorite. So Dow, S&P, Russell, NAS in terms of my preference. Jordan, good morning. And thanks for the question, Marty Jean. I think a lot of people are wondering about NAS, but it's on the crazy train. Yeah. I would love to learn more about futures trading on TOS. When I look at buying a contract, my capital required is $7K. But right. So I've heard about people talking about only needing $500. So thank you, Jordan. So day trading margin, my friend, that's the difference. So there's 3 ways you can look at futures trading, the way I look at it. If you're going to take an overnight trade, let's pull up corn, for example. Corn's a good example of one, I can buy corn. I can actually buy the ZC contract. 2, I could buy options or just flat out buy the ETF CORN, which is the ETF of corn. Third, and it could apply to both, the derivative of meaning the option on the options, the option on the futures contract, and the options on the ETF. So I guess technically that's 4 different ways, right? The one you're thinking of, $500, is typically what you'll hear myself and a lot of other traders talk about. Certain brokers will allow you to have day trading margin in the indices and other futures contracts. Sometimes the currencies will be the same, of $500 during the day trading day, meaning at a certain point of the day, 4:15 Eastern normally, that day trading is gone. Think of Cinderella when her chariot turns back into a pumpkin. That's kind of what happens with day trading margin. So a very specific time in the day, and it resets every day, you can have that lower margin requirement if you're a day trader. The overnight margins are set by the exchanges, but then the brokerages can, based on risk and their own preference, go higher from there. And different brokers have different day trading margin. It's not like day trading margin is $500 across the board. So that's not the case. So check with your broker if and what their day trading margin is. So not all brokers offer day trading margin, and that amount can change. All right. But that's probably what you're hearing, the day trading margin. Now, if you take the NASDAQ or the S&P overnight, yeah, you're talking thousands of pounds, thousands of dollars. What's the NASDAQ? 17,000 right now or something? I'm trying to remember what it is. That's where, by the way, the options are going to be really helpful. You might say, but Rog, I like the uptrend in this particular commodity, but I don't want to have to put forth the overnight margin requirement, which can be quite steep. Crude oil, for example, gold, for example. And you can play, of course, the ETF alternative options, or you can play the futures options. And that will reduce oftentimes your cost, and it will reduce your exposure by way of risk, because when you have a long call, which, yes, is an uncovered long call, but not nearly the same thing as an uncovered short. Uncovered long calls people do all the time. Your risk in a naked call is whatever you paid for the option and commission. So it's a really easy way to quantify your risk, know your budget, and you can risk a certain part of that debit. A lot of neat things you can do. A lot of neat things you can do, even if you don't want to be a day trader, but you want to reduce that margin requirement for overnight trades. All right, LLY. Nikolai. Yeah, nice looking uptrend of all the sectors that we were talking about before, where, for example, I was talking, let's avoid tech for a little while. LLY is interesting because it's one of the relative outperformers within healthcare, within the XLV. So what I would do is I would crack open the XLV, look at all the heavily weighted stocks within it, and then I can make some decisions about, and you picked a great one there. It's a great relative outperformer, double green, MACD is positive, all the things that I would want to see for a market that has the likelihood, the potential for higher highs is here in LLY. And we're sitting in a pretty thick layer of volume right now. You could call that a high volume node, as they say. It's right there with the point of control. So lots of things to like in LLY. I think if we can get above about 208 and a half, you'll probably see the market run some stops and start heading higher. So good stuff there. All right, next up is hit that. Yes, smash the. Thank you, T. Yeah, smash that like button. I appreciate that. So Oracle, yeah, it's a relative outperformer right now. We built. Yep, it really is. And again, if you're looking for shiny spots to get granular, to find relative outperformers in tech, that would definitely be it. But again, you can look at relative outperformers in SMH, CLOU, SKYY, QQQ, XLC. XLC has absolutely been the best part of the NAS. XLC hasn't even looked back. You know what that is? A lot of Disney, Facebook, Google, Comcast, Activision. I know I'm forgetting some other names, but crack open the XLC. This has been the best looking part of the NASDAQ, this particular communications sector. All right. Hey there, Raghee. Thoughts about Treasury futures and yen? Yeah, we have the FOMC this week, and great point. The economic calendar is a big part of what I'll look at in terms of volatility and potential opportunity. As far as the yen, I'm actually more focused on the US dollar, my friend. I'm actually more focused on not so much yen, because here's my problem. If I want to be long dollars, then yen and franc probably makes sense. But I want to be short dollars because I think the dollar is going to continue to weaken. So that takes the yen out of the equation, and it means I'm looking at the pound and the loonie prominently, Australian dollar and New Zealand dollar secondarily, and then the euro. So yen is really, if we're going to continue to see higher highs in equities around the world, remember, yen is a funding currency, it's a carry currency, and it typically is sold. And you'll see weak yen, strong equities. So hard for me to want to buy yen. But then here's the other thing. If I'm going to short yen, you might say, okay, Rod, well, great, we can short yen. It's not going to be dollar yen. It's going to be a cross rate, pound yen. It might be loonie yen. So now we're getting into more of the Forex conversation. But I appreciate you reminding all of us that we've got the FOMC coming up this week. AMAT, would AMAT be an exception? Not as good as Oracle, but Philip, yes. Yes, it sure would be. It sure would be. I'm with you there. Okay. All right. So regular guy, we'll talk more about that when I start up the future session here. Right now, which I've got to go do. Yeah, but generally speaking, I would say you're in good hands with TradeStation, Infinity Futures, Tasty, Toss. Those are fine. Those are fine. Okay. All right, gang. I will see you tomorrow, same time, same station. Head back on over to the YouTube channel. You'll see the next show. You have to click on the new link. I'm ending this one, but I'll see you guys there. Have a great one. Have a great trading day, and be good to each other.